certainly gives me some pause. And I've been counting all the corrections and mini corrections and two or 1 day sell-offs like the Brexit. And altogether in this bull market, I count 62 panic attacks. And this is number 62. And the question is this just a panic attack or is this something more serious? I think this too shall pass. As you guys pointed out, the outlook for the global economy still looks decent, maybe not great in emerging economies, but overall the feedback is we're still growing. The U.S. economy is still growing. I think what we're seeing here is stocks have gotten a lot cheaper, and I think it got a lot cheaper because there is concerns about a potential global recession, maybe even a U.S. recession, but I think this will just turn out to be an opportunity.
Brian, talk a little bit about the interplay of the corporate fundamentals, the decent credit markets with the way the market's reacting. If we got effectively a flat year-to-date performance in the S&P 500 right now with earnings up 20%, what does it mean for how the market is going to reward or not reward a slower pace of earnings growth next year, or maybe a narrower group of companies that are performing well fundamentally?
Well, Mike, it's a great point. I still think that earnings are going to be better than expected coming into 2019 as the majority of corporate America remains more defensive. You've still seen that even in these earnings results. They're still kind of under promise, over deliver. I know there's individual stocks like 3M that did what they did, but that's why it's important to know that we are a stock market of stocks. And we firmly believe because of that, we're seeing firsthand on why investors should actually be more active and have larger positions, less stocks, and react and rely less and less on macro and index data. I think it's providing opportunities in what Ed talked about in terms of this overreaction. In the beginning stages of this pullback, 2 weeks ago, it was more of a buyer strike. Then it was more of a momentum, let's find a bottom. Now it's just out and out reaction and momentum to the downside in terms of being overreactive. So these types of opportunities, when the market is on strong fundamental footing, like it is, like you put out with multiples contracting, we just got a better deal with respect to stocks becoming cheaper because of the sell-off.
Ed, I hate to ask you about something as pedestrian as levels, but 26.98, right? We were watching 27.10 this morning. How much, on pretty good volume, I should point out,
right.
How much of this is concerning to you today?
Well, you know, everybody gets very concerned when we go below 50-day moving averages, and then when we go below 200-day moving averages, they get even more concerned. I mean, if this is still a bull market, then Brian and I seem to agree that that's the case. Then if you look at previous times when we drop below the 200, that turned out to be a great time to buy. So that's the way I'm looking at it.